Do you think the economy is more at risk of slowing down faster than what markets are pricing in right now?
Yeah, so I think this new COVID cluster probably will mean that retail sales are going to be a little weaker heading into year end. I think that is a little bit of a new development. Having said that, I do think the overall impact should be quite short-lived because we can see the authorities are generally getting better with testing, tracing, and containing these clusters. And we can see with September that they do tend to rebound almost fully after the cluster is contained. So I think, yes, maybe a short-term impact, but it shouldn't be a long-lasting one.
We've seen the earnings downgrades. It seems to be China is leading the way when it comes to these downgrades right now. Do you think that's going to continue? And are we going to see more of these disappointing results than the beats this quarter?
Yeah, we do think that to some degree we can see that analysts have lowered their companies have lowered their guidance for the year. I do think that that is to some degree taking some of the risk out of the market when it comes to more cyclical oriented sectors. So there may be a little more to come, but I think that overall the market, especially the growth companies, are actually at a fairly reasonable valuation at this point. So we do think that in that context, in that space, the recent rally is justified.
Hey, Julia, I want to ask you then about the currency and why it's remained resilient amidst all of this. And I guess that the other part to the question is, do you think the currency is actually now trading fairly divorced from underlying fundamentals?
I think the currency is mostly tracking China's export story, especially its global trade share. And to that extent, I think the September export numbers tell you that external demand is still pretty strong. We do think that offsetting that a little bit or somewhat is the fact that dollar cycle probably will get stronger as we head into more tapering and rate hike discussions. So we don't really want to chase the RMB stronger at this point from an investing perspective, and investors should think more about the carry and interest that's coming from the RMB at this point.
Now, speaking of chasing, let's take it back to the equity markets. Do you want to chase that rally? There has been some momentum coming back within, whether that's the A-share or the H-share market.
Yeah, sure. So we think we've seen quite a bit of a rebound actually in Chinese equities recently. I think that if you think back to what's driven the underperformance this year in terms of tech regulation, in terms of deleveraging, I do think that once you start factoring some of these into your valuations, you can see that yes, there may be some valuation discount. But as mentioned earlier, we do think that broadly, China's assets are actually trading at a pretty sizable discount relative to the rest of the world. So we do think the rally is justified. It could continue as we head into 2020, maybe at a somewhat slower pace. We're not ruling out more volatilities, but we do think that as you head to the 20th Party Congress, we could get a little more policy clarity as well that could help the market figure out what the actual impact on earning and investment horizon should be.